really is a pleasure for me to have an opportunity to spend a few minutes with you this morning talking about some of the things that we see taking place in these markets and really spending more time talking about how we've watched this market change and differentiate over time. I've been with CattleFax 43 years, and I watched an industry go through a real buzzsaw from 1980 to 1998 because all we were doing was producing commodity beef. And guess what? The consumers didn't like it. They didn't like it. And as we've gotten focused as an industry over time and we've started looking at producing more high quality, more dependable products that they can serve to their families on a daily basis, it's totally changed our industry. It's the only reason we're all here today. So, as Bob was talking about box scores, I'm a box score guy too. I mean, we measure a lot of data, we measure these trends, we go back over time. I'm going to show you data that goes back and looks at the last 20, 30, 40 years, and you can make your own decisions as you look at this data on what's really driving beef demand in this country. So with that, let's go ahead and get started. And I think the bottom line, what I want to start with here real quickly up front is just giving you all a little bit of a sense and feel of where we've been. We've had a lot of headwinds, really, haven't we, since COVID. We had a big run up in grain prices. Again, we've been able to rebuild our stocks in here on grain prices. Cost of gains are starting to work back down. It looks like we're going to see cost of gains, depending on the regions of the country, move back in here to $1 to $1.10, $1.15, somewhere into that range here as we work through the spring and summer of the year based on where these grain prices are today. We're not totally out of the woods out here yet from a weather standpoint. We've seen areas that are getting more moisture. We've seen more moisture return to the Texas regions, Texas, Oklahoma, Kansas, through the Central Plains. But I just remind you all that 55% of the nation's beef cow herd is right through the center part of the country. And if we don't have moisture in those regions of the country, we're really not going to be able to grow our cow herd, are we? So as you look at where we are today, those are the areas that we really need to see things start to improve in. Matt Makins, who a number of you know, who replaced Dr. Art Douglas, who did our long-range weather work for 45 years. Matt is providing our long-range weather work today. And again, the bottom line is he still doesn't feel like we're totally out of the woods from a La Nina standpoint. The risk is that we're probably going to move back into more of a La Nina weather pattern sometime into the late spring and summer. So that's something I would just share with you to keep in mind that, again, this long-range drought cycle we've been in, we're not totally past it in here yet, but again, we don't see things getting as difficult as they were for those of you in the Southern Plains regions. You remember back to 2010, 2011, 2012, that was treacherous, wasn't it? And what we've gone through here in the last few years has been difficult as well. So, again, the bottom line, I think, when you look at where we're at within the industry, I get asked this question all the time. Randy, are we really starting to retain heifers yet? Are we starting to retain heifers to expand the nation's cow herd? What's the chart tell you? It's not happening, is it? We are seeing areas where we're holding back some heifers, but in general, the industry in total, we're still looking at some very, very elevated placements of heifers. Those heifers are not going back into the breeding herd yet. And I think some of these headwinds that we've talked about with weather, higher interest rates, again, interest is a big deal right now. Another one that I see as I travel around the country, people are they're worried. They remember the last cattle cycle. When we came through that last cattle cycle, we got to 14 and 15, and boom, we woke up in 16, and our market was half of what it was in 14, wasn't it? So those are things that have, I think, kept people a little more reserved as we come through here. But I am seeing enough I'm seeing enough intentions out here that I do believe we'll start into a slower growth phase at some point in here in 2024 as the year unfolds. If you look at the beef cow slaughter, again, you got to expand from two sides, don't you? Slow cow slaughter and hold heifers back. We're not doing it here either, are we? So the bottom line, if you go back and we go ahead and you look at this next chart that we have here, this shows you what it looks like from a cow herd standpoint. The beef cow herd factory. Now, I mentioned to you a few minutes ago, as you look back in this chart, going back to 2010 to 2014. Remember, that was drought-driven then as well, wasn't it? Very similar to what we're looking at in today's scenario, a very similar decline that we've gone through. We've lost about 3 million beef cows in our operations in here, and again, that's largely attributed to Mother Nature. We've had demand to support a larger cow herd than we've got. We just haven't had the feed resources, have we? So, again, you can see that we think this is going to be a much more stretched out cattle cycle than what we've seen in the past. Much more prolonged. Again, the expansion will likely start to kick in here in 24 and 25, but we very well may not be to our smallest cow herd number. It may be 2026 before we're at our smallest beef cow herd numbers. So just keep that in mind as you look at it. For those of you that are looking out here at the feeder cattle market, you're looking at finding more cattle to turn out on your or your winter grazing programs. We've got the best wheat pasture we've seen in years, don't we? Well, we did before this ice storm. It looked like we're going to cover up a lot of it in Kansas and some of those areas, but the bottom line is we have had much, much better moisture conditions in a number of these areas. We've got better wheat pasture, but with a feeder cattle and calf supply down 1 million head, it's going to be tough to find the available cattle to turn out on these programs as we go forward. A lot of these cattle, the reason they're on feed numbers are more elevated was because of the drought, isn't it? So again, we're going to see this supply outside of feedlots stay tight in here. Again, the raw material that we have, whether it's going to our grazing programs or going to our feeding programs, this is going to continue to stay tight here for another couple of years. I mentioned this here so you can see it from a feeder cattle and calf supply. I've probably been asked this several hundred times in here in the last 2 months as I've traveled around the country is, why are we importing more feeder cattle and calves out of Mexico and Canada right now? What was the market signal? How strong was that market signal? All the feeder contracts, when you go back into September, we had a 260, 270 futures market. What'd that say? It said we needed more cattle. Did we respond? We responded, didn't we? Not only in the U.S., any of us that had cattle out here we had on grazing programs, we were bringing them. If we had background in cattle, we were bringing them to the market because the market said it wanted them. Markets work. Markets work, and that was the signal that it sent. So we attracted more of this supply. We basically went from the low end of, if you look at the data on the cattle that we bring in from Mexico, we typically will range from 800,000 to about 1.2 million. And now we're back up in here on, I said 1.2, 1.4 million. Now we're back up in here on the upper end of that range and will likely stay at a more elevated level in here over the course of the next few years as we go through these tighter supplies here in the U.S. So the bottom line in here, when we look at the inventory numbers, you can see where I'm going. We're going to have less cattle, aren't we? Less cattle all the way through the systems. We're making up for some of that with weight. Again, weights are record high this year. We think they'll be up another 9 to 10 pounds next year. We're going to continue to make these cattle big. That's what the market's telling us to do. We're going to continue to make them big. I don't think there's any doubt about that. So just keep that in mind. If we look at the last 40 years and we go through the decline in numbers, carcass weights have offset about 75% of the loss in the cattle numbers that we've had during the course of the last 40 years. Remember, these carcass weights are increasing between 5 and 6 pounds a year, and they have since the 1970s. So that adds up to an awful lot of tonnage. There's their steer heifer slaughter. Again, the bottom line is when I say steer heifer slaughter, this is high quality fed steer heifer slaughter. This is not non-fed, this is all fed cattle. That chart starts in 2000. The reason it starts in 2000 is that's the largest number of fed cattle we've had in the history of our industry. 30.2 million head of cattle in 2000. You can see how we've declined in here over the last few years. We're going to continue to decline. It looks like we'll probably see these numbers move back in here somewhere between 23 and 23.5 million head. Similar to what we were in the last cattle cycle in 2014 and 2015. We hope we don't get quite that tight. Again, that was a problem for us, wasn't it? We got too high. We priced ourselves out of the market as we went through that because we just couldn't supply enough product to our consumers on a daily basis. So we'd like to find a middle ground in here, and hopefully we will with being able to utilize some of these additional animals in our system. So the bottom line is beef production was down about 5% this last year. Looks like it's going to be down about 4% in 2024, and likely going to be down another 3 or 4% in 2025. So we're going through this stage of the cattle cycle where supplies are declining, prices are going to continue to move higher, they're going to continue to trend higher. Again, we'll talk about demand here in just a minute, but in general, demand has been pretty darn good as we've come through this stage of the cycle. So let's go ahead and let's shift gears and let's look at the demand side of the equation. And the bottom line, I think, is this, is we all know that retail prices have had to move higher. What's the market have to do here? We've had beef demand at 30 to 33-year highs. Put that in perspective. Beef demand has been better 2020, 2021, 2022, and 2023. Beef demand has been better than it's been any time since the late 1980s. That's a long time ago. That's a long time ago. You put that in perspective and you see what's had to happen when we've done such a good job of changing the quality of product that we're putting in front of the consumer. They want more, not less. And as we come through here, now price has to ration that smaller supply. So prices have moved up in here. The all-fresh retail beef price is basically at $7.90 a pound. We think we're going to hover in the high 7s to low 8s all through 2024. So again, it's going to stay more elevated. The other proteins have gone through a similar situation with both pork and poultry. They've had some demand pushback. I would say our demand pushback has been pretty minimal up to this point in time. We're not seeing a lot of that. The futures markets are pricing in more of it, but again, up to this point in time, I would say our demand has stayed pretty darn good in total. Now, if you look at the import and trade side of the equation, this is also an important piece of the equation for each of us not just from a beef industry standpoint, but from a total protein standpoint. And for those of you that are a little bit younger in the room, let me just give you a little quick snapshot here. The U.S. is the largest beef producer, largest poultry producer, and the third largest pork producer in the world. 1, 1, and 3. We export about 18 to 19 billion pounds of protein on an annual basis. That's a lot of tonnage, isn't it? If we had to consume all of that protein domestically, that'd be another 45 pounds per person. How do you think our markets would like that? Wouldn't be very pretty, would it? Again, it just gives you a perspective in here of we've got between 4 and 5% of the world's population here in the U.S., and yet we're producing that much protein. Why? Not only do the U.S. consumers trust what we produce, but the global consumers trust what we produce. It's the promise. It is the promise. We all have to keep that in mind on a daily basis in everything we do in our production systems, to make sure that we're thinking about every decision we make, not only the consumers here in the U.S., but globally, that enjoy our product on a daily basis. So you look at what happens when you come through these kind of transitions in here. Obviously, our per capita supply is going to decline, isn't it? This is not a demand problem. This is a supply problem. We just don't have as much of it out here as we'd like to have. So we're going to go through a time period here over the next 2 or 3 years where prices are going to be more elevated as a result of just not having the supply to put out there on a per person basis, day in and day out, week in and week out, month in and month out. Again, that's not a situation we want to be in, but as long as Mother Nature rules the roost, that's really what we're dealing with, isn't it? Let's go ahead and let's shift gears and let's talk about what I think we're really all here for. I want to focus on this because these are the changes. These are the changes that I've seen as I've come through my career here, and I've watched our industry become intentional. And I've watched programs like what you all have built here change an industry. Change an industry. And if you go back and you look at these numbers in here, obviously we've had a situation that we go through the ups and downs of the cattle cycle. Right in the middle of the chart, you see the last cattle cycle, and then we go through the break and we go through the COVID lows that we went through that we all remember, and bang. The last few years, it's been pretty volatile, hasn't it? These markets have moved pretty fast. If you look at this next chart in here, that's a little bit small for you in the back of the room, but let me just share with you a couple of highlights on this chart. Fed steer prices this last year, there was a range of $33 a hundred on Fed steer prices. Ryan, on the product side, the cutout, there was a $71 range in the cutout. I'm sure you forecast that just like I did, that we were going to sell cattle at 185 or 190 this year. Again, these markets move. They move fast. They're not just trading what they see today, they're trading what they see in the future. Okay? Those of you in the cow, calf, and stocker business, $75 to $80 range in prices this last year. We're going to see a minimum of a 10% ranges around these prices at the fed cattle level. If you're seeing a 10% range around prices at the fed cattle level, again, we're going to have a market that averages on top of 180 this year. That's a $30 to $35 range. That tells me that feeder cattle and calf prices could have another year of $60 to $70 ranges. Managing the risk is important, isn't it? Programs like we're talking about here today, that's critical in here to be able to manage the risk on those programs in here, because the volatility is going to be pretty intense. Now, if we look in here and we look at the profitability for cow-calf producers, this to me is where the rubber meets the road. This is our beef cow herd factory right here. If these folks aren't making any money, there isn't any inventory all the way through for our grazing programs, for our finishing programs, or for our packers. It's not there, is it? What's happening with Prime Pursuits and 44 Farms? More money's flowing back to producers. More money's flowing back to producers. Producers that are hitting these targets are able to deliver more volume, more dollars back to these operations on a regular basis. there hadn't been a lot of profitability here. You know, if you're making $50, $100 a head in cow-calf operations, that's not hardly enough to buy lunch today, is it? You look at where these numbers are right now and you think about where these programs can take us in the future. Let's shift gears up in here. These are the things that I want you all to think about. This is the differentiation that I see taking place in the industry between those folks that are the high return versus the low return producers in the industry. We've been surveying this, Bob, on our box score since 1980. Since I went to work at CattleFax, we've been surveying this. We'll survey 1,000 to 2,000 cow-calf producers across the industry on an annual basis. What are they doing? What are they doing different? What makes them more profitable? Are they weaning a higher percent live calf crop, weaning weights, number of cows bred per exposed? You guys all know the metrics in here I'm talking about. The bottom line is this is what we find consistently differentiates these programs. All of these. What's the last one on the list there? Marketing. Marketing. How much more money can we do if we do a good job of marketing these cattle, putting them into the right program based on the genetics that I'm producing on a regular basis? That's the one that just continues to jump out at me. And you can see it from a profitability standpoint here. If you look at these stocker operations, look what we're seeing in here. We're seeing some profitability here for our grazing programs. We think we'll have another strong year for profitability again in 2024. When I look over here at what's going on in here at our can we advance, please? When I look in here at what's happened in here in the back, this is the bottom line in here, what I was talking about a little bit earlier. I want you to look at the left-hand side of this chart. We never want to forget this lesson. This was our industry striking out, and we struck out a lot from 1980 to 1995. Beef demand was cut in half. We lost 400,000 producers. We lost 5 million beef cows. We lost 16 million head of cattle in our inventory because we weren't giving the consumers what they wanted. Look what changed in the late 1990s and early 2000s. The curve changed, didn't it? Because we got focused. We started giving the consumers what they wanted. What was it they wanted? They wanted more of this. They wanted more prime, and they wanted more choice. And they wanted more upper two-thirds choice. This has been phenomenal, the change that we went through here. Basically, a flip of the coin. A flip of the coin was all we could produce then of prime and choice cattle. 1 out of every 4 steaks that the consumers ate was an absolute failure in their mind. 1 out of every 4. We don't have that problem today, do we? Now, if you look at this table in here and you look at what changed in here, first thing, we had to change the makeup, genetic makeup of our herds, didn't we? Look at the increase in the number of black-hided cattle coming through our systems, primarily Angus cattle. Huge change. Now, if we look over here, look at the table with me. Just go back to 2005 and look at 23. A few of these numbers could tweak just a little bit yet in 23, but it's pretty close to the annual numbers. Look at the number of choice and prime animals. The percent change is up 45%. It's up 45%. Look at the upper two-thirds choice and prime. It's up 89%. What's the spreads look like the last 3 years? What's the spreads look like in here? Look at the green line here on this chart. This is choice and prime demand versus select demand. Choice and prime demand has been up between 60 and 70% since the demand lows in 1998. The demand for select beef is flat. It's not grown. What's the market telling us it wants? It wants what you all are here for today. That's what it's very clear. That's what it's telling us. Now, if you shift gears in here and you look at what we've gone through in here, obviously we're breaking these down into prime and choice. This is carcass counts. It's carcass counts. How many of them are available in each of these different metrics to meet those consumer demands? The bottom line is we know that this is going to tighten up for us here over the course of the next few years. If we look over here at the grades, I think this is maybe important for y'all. You may want to take a picture of this. Remember, I just showed you how much increase we've seen in choice, upper two-thirds choice, and prime production. Look what these grid premiums have done. Look what the market signal has been. 2021. Each of these, the choice select spread in 2021 was $18. The CAB to choice spread at that time period was 23, and the prime to choice spread was 23. This last year, the choice select spread was record wide at $20. $20, the widest choice select spread we've had in history. And you can see when you add all those together as you come up through here, the third biggest grid premiums in total. The market wants high quality beef that it can depend on day in and day out. The data is very clear. It's very, very clear. So as you look at this, I would just say take this into account as you're looking at the decisions you have to make as producers. If we shift gears here as I finish this up, let's shift past this. I want to show you another chart in here that shows you the culmination of all these grids. This is just looking at why we sell cattle the way we do in our industry today. Why do we sell cattle on grids and formulas in the industry today? Look if cattle are grading over 80% choice. The average grid premium is just over 80% choice this year, was between $80 and $90 a head. What if those cattle were 95% choice and prime and 30 or 40% prime out of that? You're talking about premiums that are up around $200 a head. I saw the biggest grid premiums in history this year. The biggest grid premiums in history on cattle that really hit the target. If we're selling cattle on averages, we don't get these signals, do we? This is why our industry's made the transition that it has to sell more cattle on value-based marketing programs. Again, that's where we need to be. If you shift gears with me one more slide up, this is looking at it on a more week-by-week basis as you come through. You can see how those premiums in here on cattle grading over 80% choice on a weekly basis, how much more premium they bring in total. As I finish up with you here, this is what I really want to focus on. This is, to me, is where the rubber meets the road for an industry in total. Take your eyes back to the left-hand side of this chart. 1980 to 1998. There was no profitability in the industry, was there? There was no profitability in the industry. I just told you how many producers we lost as we went through that stage of that 20-year cycle. We started to turn the corner in here as we got in here to the 2000s. Look where the number's been in here the last decade. We're basically at $500 a head. This is the only place you bring new dollars into our markets is through the consumer. That's the only place that we can measure growth in beef demand. It's coming through the consumer. Are they willing to pay for it or not? What's that chart tell you? $500 a head. That's $550 a head when you look at it. What's the highest percentage of those margins going to be the next few years? The cow-calf producer is going to make the highest percentage of that number as we come through here. And again, these cattle that you're producing that are hitting these targets, these demand targets from our consumers, clearly that's where this industry is headed. So as I wrap this up in here from a box score standpoint, hopefully this has been clear to you in here on where these markets are differentiated, what these markets want, and what they're willing to pay for. Bob, thank you for the invitation to be with you. I hope you all have a great conference. I'll be with you through the middle of the day. If anybody has any questions, please don't hesitate to corner me. I'll be glad to answer your questions. Thank you very much.